Hello, everybody. Welcome to another episode of Simply Bitcoin Live. Today, I have Nik Bhatia. We're going to talk to him a little bit, but first, I want to give a shout out to the awesome Bitcoin company that powers the show. Swan Bitcoin, best place to stack sats by Bitcoiners for Bitcoiners. You buy up to $10 to $10 million. They incentivize dollar cost averaging and self-custody. Check out Swan Bitcoin today. That being said, Nik, thank you so much for joining us on Simply Bitcoin IRL. You've been on the regular show before. I don't think you've been on the interview series. So I'm super happy to have you. And we actually get to have a long conversation. So I'm really looking forward to that.
Thanks, Nico. Thanks for having me back. Appreciate it.
So, Nik, again, I think this was a total coincidence. You are coming on the show after the Fed just announced that they are hiking rates, the highest rate hike that we've seen in over 15 years. What are your thoughts on that?
Yes, so we are at the highest federal funds rate that we've had since the financial crisis. And it is the result of a lot of inflation in 2021 and 2022. The Fed was definitely behind the curve in terms of hiking rates. Inflation was already above 5% when they started. And I think it was obvious to all that they would make their best effort to hike rates as much as they could. And I think it also surprised many that they were able to get this far without breaking the financial system, which they haven't done yet. They are starting to break the economy, but we haven't had any breakage in financial plumbing, aside from what happened in the UK government bond market and the Bank of England response a few months ago. So besides that, we haven't had any financial crisis or any crash in stocks. And because of that, the Fed has runway to keep going. Now, I do think that they're at the end of where they could or where they can hike rates to. This might have been the last hike today. We might get one more in February. I'm not sure about that. My bias is probably that we won't, but here we are at Fed funds at 4.25, and again, it did catch many people by surprise that they made it this far.
So, a lot of people are anticipating a recession in 2023. Do you believe that's the case?
Yes, and what we saw in 2022 was that Q1 and Q2 were actually both negative real GDP growth quarters. But the reason for those quarters being negative is because even though the economy was growing at about 6% per year, the inflation adjustment was above 7% for both of those quarters. Therefore, the real growth component came back negative. Now, the economy had positive growth in Q3, and it looks like it will or it might escape Q4 with another positive growth. But looking forward into 2023, the outlook is quite negative. Looking at a few components here. So, number one is the housing sector. Housing is in a severe contraction right now. Housing prices are declining month over month for a few months in a row. And by the middle of next year, will be declining on an annual basis as well. Housing is about 25% of the economy. There's a lot of employment also that goes along with finishing houses, finished houses, household formation. And so the economy will slow widely due to the contraction in housing. The economy is also already slowing because of a decline in business spending. So businesses have been looking at the economy and the interest rate outlook over the last few months, and they have decided that a slowdown in the economy is very likely. They're slowing spending, they're slowing investing in projects, and they're also slowing hiring and actually starting to lay off workers. So from a couple different places, we do see that contraction and slowdown is happening or likely. and then we'll just have to wait for the statistics. I think whether or not an official recession is in the cards for 2023 is up to the government statisticians, so I'll let them decide that. However, I think it's pretty clear from our perspective at the Bitcoin layer that the economy is heading to quite a slowdown. Yields will come down in response to that. The Fed will have to stop hiking rates in response to that, and other things will happen accordingly.
So I'm going to take advantage of that. Before I ask you more questions in relation to what you just said, I want to take advantage of the fact that you brought up the Bitcoin layer to ask you, what is the Bitcoin layer, Nick? What do you guys do? It's awesome. You guys started a YouTube channel. I see it. You guys are dropping shorts, interviews. I think you had Saylor at one point. So for anybody that hasn't heard about it, what is the Bitcoin layer? Is it just a YouTube channel? What are you guys working on over there?
Yes, the Bitcoin layer is a research platform. We cover Bitcoin through a global macro lens, and we have a lot of products right now for the audience. We have a newsletter, which people can find at thebitcoinlayer.substack.com. By the way, all the links are available at thebitcoinlayer.com. So you can sign up for our newsletter. We have a free product. We put out a weekly update that covers global macro and Bitcoin. We have paid updates as well that come a couple times a week. That includes the more in-depth research and analysis on the Fed and things that are going on in interest rates and other risk markets, including Bitcoin, including on-chain insights and on Bitcoin as well. We have a YouTube channel. We're putting out 2 long-form episodes per week. Those are either me interviewing somebody as part of our guest lecture series, or myself just giving my own research and analysis take. And then we have shorts coming out. So every single day, my research associate, Joe Consorti, he does a daily show. It's called the Daily Cup of Joe, 45 seconds to a minute, gives you all the global macro highlights that you need to know and an economic outlook for the day, what's coming in terms of data, or what did we just see in terms of data, and then shorts on YouTube and Instagram and TikTok, Twitter as well, to just kind of condense all of this content that we're doing and give people short form, digestible content on Bitcoin and global macro. Now, in 2022, we spent a ton of time on the Fed at the Bitcoin layer. And that's because global macro has been in the driver's seat and moving around asset prices, especially with high inflation, rate hikes, and weak risk markets. But we are here to cover the transition of the global financial system to a more Bitcoin-centric one. And in my personal thesis, I believe that to be a multi-decade process. I'm not a huge fan of the word hyper-Bitcoinization, but I'm a big fan of the concept of Bitcoinization as a slow and steady process. So Bitcoin's in, about year 14 of its life. I think another 14 years we'll be still sitting here talking about the maturation of Bitcoin and transition of Bitcoin to becoming one of the global world reserve currencies, a centerpiece global asset as a storage vehicle, and other things of that nature. So that's what we're covering at the Bitcoin layer, and I'm looking forward to doing it for a very long time.
Awesome. Yeah, I'm a big fan. I've definitely checked out some of your guys' content. So Nick, it's interesting because that kind of goes against the Bitcoin narrative, so to speak, on Twitter, right? Which is you hear this all the time, hyper Bitcoinization. Why do you believe it's going to take a little bit longer than everybody else thinks?
So I'm in about year 6 of my Bitcoin journey. In the beginning, I read about the concept of hyper Bitcoinization and I was attracted to it. And it was an interesting thought exercise to see what will the world look like as Bitcoin starts to catch on. But now that I'm 6 years in, I can see that it's not happening in any hyper sort of way. And, I'm just narrowly using the word fast here. And so we're 6 years in, and there's no more. I guess today, the people looking at Bitcoin as a potential global reserve asset 6 years ago are looking at today and saying, oh yeah, it's started to become that. Not that, wow, it really happened quickly and Bitcoin has taken over the world and all other currencies are dead. So is that the eventuality for Bitcoin, that all other currencies die? I'm not so sure. And what is the eventuality for Bitcoin? Coexisting with other assets and currencies and taking a more dominant role in the way that money moves, or even the way that governments and companies and people store their wealth. So we've had one country to adopt Bitcoin as legal tender, and it's not its only legal tender, it's a sharing legal tender status with the dollar. We have one S&P 500 company, Tesla, that has added Bitcoin to its balance sheet and subsequently sold it. The other 499 still haven't. We have a few of the world's top asset managers, namely Fidelity, Bank of New York Mellon, announcing custody products for Bitcoin, but it's still not, industry standard to offer a Bitcoin custody product at the custodian level. So it's going well. It's going well for Bitcoin. But to qualify for hyper Bitcoinization, it would have to be happening a little bit faster than this. So it's a semantics game. I still strongly believe in the long-term adoption and growth of Bitcoin and the user adoption, and that we might hit a point where we leave Bitcoinization, the slow and steady, and we get to hyper Bitcoinization. But it's too speculative for me to make a central part of my thesis at the Bitcoin layer when I'm writing material to just keep talking about hyper Bitcoinization. It's nice to think about the long term, but I'm trying to cover what's happening, trying to look forward 3 to 6 to 12 months, still keeping this idea that long-term Bitcoin adoption is here with us and here to stay. But it doesn't have to happen in 6 years or 16 years. Just that it's happening is what I'm covering. And again, I'm in year 6, so it hasn't happened in these 6 years yet. So I'm just using my time in the industry to support that.
So it's interesting because I'm on year 6 as well, 2016. And it was, this isn't the first time I've heard this, Nick. I also heard VJ Boyapati when he came on, and he has I guess a similar theory that the adoption is going to be a lot slower than people think. I don't know how I feel about that. But I'll ask you this, and then perhaps we'll elaborate, or we'll dive a little bit deeper into that. Do you believe Bitcoin is inevitable?
Yes, I do. And the reason that I think it's inevitable is because look how Bitcoin has popped up all around the world. So when Bitcoin pops up in the United States in 2009, 2010, and then the UK, and then Australia, and then it starts happening in different languages, non-English languages. The white paper is written in English, right? So non-English speaking countries that get the concept and they embrace it. And then Bitcoin continues to win network effect battles every few years and in different continents as well. So Asia, for example, will have had their own experiments with altcoins over the last 10 years. Latin America, too, would have their own experiments with which coins could work in that part of the world. Each one of those experiments has succumbed to Bitcoin's network effect. So that your question is it inevitable? Well, is it can we say it's inevitable because it's popped up in every corner of the world in 100 languages around the world and beat out competitors of the same technological, or let's say an aspiring technological uh, brand? So I do believe that it is inevitable, especially with the decentralized nature of it. The fact that it can't be shut down and can't be censored and can't be subpoenaed, um, as well, adds to this inevitability. People have recognized it as money. The fact that it still isn't dead makes its inevitability, I think, already with us today. And it's just a matter of growth now. And of course, Bitcoin has to get through this bear market as it has uh, in past bear markets. And then, in 2 years, if the Bitcoin price is at $100,000, it's very easy to say, yeah, it's inevitable, because each time that it supposedly dies, it comes back to life. But this is the depths of the bear market, or where people, maybe non-Bitcoiners, will have the most doubt that Bitcoin is inevitable. But I think people that are maybe in their first or their second or even their third bear market feel more strongly that this is just another part of the cycle.
So do you think, so one of the things that I'm hearing a lot this cycle, and I'm curious to know what you think, is I've heard this a couple times, which is like, Nico, the price, the fiat price has actually gone down below the 2017 high. And you could actually make the argument that it's been like, if you, of course, you have to pick the dates, but you could make the argument that, hey, this thing has been flat. I mean, it has ups and downs, but this thing's been flat really since the 2017 peak. What would you say to those people? Are they wrong, or they just don't have a long enough time preference?
No, they're not wrong. Bitcoin is flat over 5 years, and it now doesn't even matter if you're picking dates, because there's a several month range, from late 2017 to early 2018, where we are flat on price or down. So no, I mean, that's an accurate assessment. It's also, I would think, accurate to say that the Fed, in trying to raise rates over the last year, is trying to regain some of the credibility that it lost, in part to Bitcoiners pointing out easy monetary policy around the world. It is a big part of the investment case for Bitcoin, is that central banks don't have any way to tighten their belt. Well, that has reversed, and it has been reflected in the Bitcoin price as well. Now, Bitcoin falling below the 2017 high is technically not is technically quite bearish. And what we saw is that basically, once it went 20 through 20, it went straight to 15 in short order, and that type of price action there is, it's almost, if you look at the chart, it's almost obvious that once you lose that level, that there's not a lot of support. And one of the things we do at the Bitcoin layers, we look at how many days, actually calendar days, it's spending in each one of its price ranges, like in $1,000 cohorts or $5,000 cohorts. And what you can basically see is that there was no time spent between 20 and 30K, a bunch of time around 20K, and almost no time between 12 and 20K. And so there's not a lot of liquidity in some of these pockets. And for Bitcoin to get back above its 2017 all-time high, it's going to, run into this resistance, this behavioral resistance that we see here. And it is concerning. I was asked this a few months ago, what what would I think if, Bitcoin fell below 20K and all that. And it is it is concerning on the chart when you think about how it got here to below 20. We're at 18, right? Not much below 20. We came off of two massive busts in the industry that had cascade selling to go along with them, not to mention the entire calendar year of 2022, one of the supposedly largest exchanges allegedly selling paper Bitcoin into the market without even sourcing it. Now I'm talking about FTX here and some of the work that on-chain forensic analysts are doing and trying to prove that they were never actually even sourcing any of the Bitcoin that people were buying on their platform, or most of it, let's say. So it's worrying, but again, like in bear markets, we understand that it the bear market is going to wash out as many people as it can, and it's going to last for as long as it has to rid the ecosystem of bad actors or people that are maybe disingenuous or not actually interested in Bitcoin for the technology, and we're only in there for a quick profit. So Bitcoin has this really natural flushing mechanism, and we're right in the midst of that. It hasn't changed my conviction on the long-term adoption of Bitcoin, and actually has brought me some relief, if I'm being completely honest with you, Nico, some relief that to learn what FTX was doing
Mhm.
this year, and that maybe not all of the price action that we saw was natural. And so, what will happen on the way back up? Who knows, and anybody's guess. And the price is what it is today. It's not like when the details came out about FTX that the price automatically doubled in the market. It's still where it is today, and has suffered. It suffered a lot of damage. It's a technical analysis term that we use, but there's an immense amount of technical damage on the chart, and it'll take time to work itself out for sure.
100%. And I think a lot of people didn't anticipate, that this was going to happen. And it was a perfect storm, right? It was miners. And when I heard this, I thought it was just so ridiculous, using ASICs themselves as collateral, taking out these crazy loans, FTX doing their backroom stuff. Now you're hearing chatter about Binance potentially being in trouble. Gemini owes $900 million from their user funds that were using the yield product. But I agree. I think that we're seeing this, we always, the Bitcoiners saying is like nature is healing. And I do believe that's what we're seeing. Now, you said something really interesting, Nick. You said natural flushing. Is it I mean, we're seeing do you think that what we're living through is just something that we would normally see in the markets? But for example, what we see in the traditional markets, like the example of 2008, is you see this intervention by the state, by the government to, and you hear the things too big to fail. Like, what is that? What does that mean? Right? It's fascinating to see there is no too big to fail. You just see it fall. And I would make the argument, Nick, that that's a good thing, right? That these companies that took these risks, they shouldn't be entitled to these bailouts, right? What's the old saying, right? It's like you're a capitalist when you're making profit, and then you're a socialist when you're losing money. So, what are your thoughts on that?
Yes, I agree with you, strongly agree with the way that you framed that. So this is actually one of the greatest challenges to this asset class and to holding it, because it takes a lot of understanding to hold through these types of flushes. So number one, you're right. There is no lender of last resort. There is no bailout mechanism. And so everyone goes bankrupt and goes actually under. And sometimes it's bankrupt under, sometimes it's um, stealing the money and disappearing. Sometimes it's stealing the money and going to jail. Sometimes it's the SEC coming to shut you down. Sometimes it's a hack exposing the lack of security. And 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 in Ethereum's case, they just fork the chain and go to something different. But in most other cases, it crashes and burns and flushes. And so that process it's not only natural, but it's almost out of the norm of how the average investor thinks about the way that asset classes should perform. And so the average investor looks at 75% drawdowns and is terrified and won't touch the asset class. So I wrote the 2018 bear market from 20 down to 3K. Okay, that's an 80% drawdown. And this time around, I'm looking at the drawdown of 80% and reminded that in this long-term adoption cycle, you will have fraudsters, scammers, and money grubbers come in, attempt, some will succeed, many will fail, it will crash and burn, and everything will renew. But for most people, how can they watch it crash and burn and hang on without, let's say that they haven't been through a bear market before, so you don't have that advantage. And then let's say you haven't read or studied enough about Bitcoin's decentralization, and you haven't read and studied enough about Bitcoin's adoption in countries across the world with less than stellar currency regimes or political regimes. It's going to be very difficult to hold. And that's why you see people dump. I have personal relationships, people that sold this year that just couldn't make it through the bear market because the conviction isn't 100%. It's somewhat less than 100% because for whatever reason they don't believe, they don't see, or their belief was there but it's been shaken because it wasn't strong enough. Again, the word belief is there a lot because you do have to believe in the network itself and the network effects, and that network won't go away. And I think you have to be a user of the network too. Like, have you sent Bitcoin transactions to yourself from your exchange to your own self-custody? Have you practiced self-custody? That's another thing we didn't even talk about. How many people lost everything this year because they never made the effort to learn self-custody? Many people. And so there's no bailout mechanism, so there's max pain. And if you can remember the max pain of 2018, you had a better year this year from an emotional standpoint. If you couldn't remember the max pain, you might have gotten shaken out. And to think that this is the last time we'll see that in Bitcoin would be foolish. I even wrote something, I think it was maybe late last year or early this year, where I said, is the 4-year cycle in Bitcoin dead? I was thinking maybe. I was wrong. But we'll have to see going into the halving in 2024, are we going to see another bull run? Are we going to see another bull run if the Fed goes back into QE? If the Fed takes 5 or 6 years to get back into QE, are we going to see another bull run when the Fed starts cutting rates? Is there going to be some big wave of adoption from sovereigns? All of those things we're not sure. We're not sure how the Bitcoin market will react. But yeah, to answer your question, it is very important for Bitcoin to not have that lender of last resort. It brings a lot of pain to the casual investor, and it honestly keeps Bitcoin a fringe asset, to use that term lightly. It keeps it fringe as long as it keeps having 80% drawdowns every 4 years. It will remain fringe because the portfolio management textbooks can't even compute that type of volatility. Their models error out. So It's another reason I think that we're not in for any hyper Bitcoinization. This year just proved it again that with all this, pain that has to be experienced by the casual investor, it precludes some of that mainstreaming of Bitcoin. Some.
And well, also, and I completely agree with you. I think that it's a feature, not a bug. And what's really fascinating to me, Nick, as well, is the fact that it doesn't matter who you are, what your status is, whether you're the CEO of a public company, you're the president of a small nation, Central America, you still have to pay your price of tuition, which is something, so we got in 26 class of 2016, 6 years. We paid our price of tuition 2018. That was brutal, and you're looking at your portfolio, you're like, whoa, this is crazy. But you also need the religious fervor and the understanding to not only endure that pain, but December 2018, 2019, you're like, how can I buy more? Like how can I grow my stack? And what's fascinating is watching Michael Saylor and Nayib Bukele going through this experience, and of course we're seeing what they're showing publicly. And it reminds me of what I showed publicly in 2018, right? I was like, no, like this, I'm right. Like this is the thing. But that must be a tremendous amount of pressure. I can't even imagine what Michael Saylor is going through psychologically and what Nayib Bukele is going through psychologically. But there's a beauty to it, which is everyone's equal here. You can't avoid it. You have to pay the price.
Let me ask you a question, Nico. Do you have friends and family that are potentially underwater on their Bitcoin position, and in some part thanks to you telling them at some point in the past you should be involved in Bitcoin?
100%.
Okay.
Absolutely.
And is that pressure from family and friends any less than what a Michael Saylor or Najib Bukele has to face from the public? I mean, internal emotions. I'm talking about human emotion. If you're responsible for someone you love, uh, I think that it's the same. And um, I think that's something that all Bitcoiners I know have had to experience in some way, where they have to go through the stages of uh, Bitcoin, let's say Bitcoin evangelism, or even the disciples of Satoshi, as I saw Marty Bent labeled by one of his readers yesterday. I love that. Marty is one of Satoshi's disciples, and he is. Um, but my point here is that all Bitcoiners have gone through, oh my God, we got to tell everyone about this. When you first dive down the rabbit hole, I got to tell everyone about this. Then it's like you tell your family, you got to buy some Bitcoin. Like, do you have any? Are you protecting your portfolio? Do you own any? And then, have you figured out your own self custody? Do you have your own wallet? And then you realize that, oh my God, people aren't going to take responsibility. They're going to buy it on Coinbase. They're going to leave it there. What do I tell them? Then you told them to buy at 1,000, 3,000, 10,000. Then it's like 48,000. They're like, should I buy? And you're like, I mean, I guess so. Why haven't you yet? And then they're down 75%. These are emotions that I think every Bitcoiner has to live through. We all have to figure out what is the right way to teach people about this technology and this societal good. That's part of why I'm in Bitcoin. I believe that it has an enormous amount of potential for societal good. And then how do you play off of people's greed? That, just because they're your friends and family doesn't mean that they're all of a sudden in it for the tech and saving the world and giving people financial empowerment. They might just want to make a buck. And so it, there are a bunch of challenges here. I know your question is about Saylor and Bukele, but it's not just them. It's all of us. And what message are you trying to put out there when you're, let's say, people on Twitter that have public profiles and are talking about Bitcoin research and analysis on a daily basis? What what type of behavior do they have in terms of what are the values that they're promoting? So is it self-custody? Is it number go up? Um, each narrative, you have to own that narrative. And so, on a personal level, it's I don't evangelize to friends and family anymore. I just write. And if you want to read what I'm writing about, you can follow along now. But I'm not going to go and shake you and say, hey, why don't you own Bitcoin yet? Because the emotions that we just described over the last few minutes through bull and bear markets can be heavy for some people. Some people are like, okay, I don't mind if you didn't listen to me at 3K, you're an idiot, and you should be above water, not underwater in your position. Some people are not. And so that's that's kind of my approach. And I hope to reach people in all corners of the world in all socioeconomic backgrounds, because I think then you'll get a better, or you'll reach more Bitcoiners like that.
100%. And I think that bridge, the so many realizations and mistakes that you learn along the way. And I'm at that point. I'm at that point where it's not that I've lost faith. It's just that, like, you got to do and I'm done trying to convince somebody. I think I've said everything that's needed to be said. But interesting. And before, and I want to take advantage of the fact that you're here to talk about something that was very historic today, right? And what I believe we're seeing, Nick, is, we hear this all the time, right? The then they fight you stage. And I do believe that Bitcoin has reached such a height, such a popularity. You're seeing, BlackRock announced it, Fidelity announced it, right? You're seeing it really potentially be embraced by, of course, the FTX collapse. You could make the argument that set it back a couple of years, but it was definitely on track for that. But the thing that I want to talk about, Nick, or at least want to get your opinion on, is the bill that was introduced today by Senator Elizabeth Warren and Senator Marshall. So it is bipartisan, and the bill would require devs to register their identity, obtain a license, censor and surveil users, and it would ban privacy tools as well, right? So it clearly, and the way that I see it is the states fighting back. This isn't my words. This is Coin Center's words. They do believe that this bill is not because they aren't educated on this matter. It's on purpose. And they took advantage of the FTX collapsed, and they used that as an excuse, as a justification, in order to introduce this type of language. And even if it doesn't pass, at least what it's going to do is move the Overton window. So what are your thoughts on that, Nick? I'm sure you've ran into it because it was all over Twitter this morning.
Yes, so maybe this is the portion of the interview where I take out my American flag and start waving it behind me. But let's say I have almost no confidence in Washington, but a ton of confidence in Americans. And I believe that the restriction of personal privacy rights and all that will be fought at the legislative level appropriately. And if there are laws that are passed that restrict people's ability to do things in an online setting, let's just say, that Americans will ignore what they believe is unconstitutional for as long as it takes for that case to make its way into a court and to see the light of day. So that's my optimism hat, that Bitcoin is an expression of math and computer code. That is a form of free speech. It is protected by a Supreme Court decision, or sorry, a Federal Circuit Court decision, and that the freedom of people in America to purchase Bitcoin and to transact Bitcoin was never given to them. Hal Finney did not ask his government whether he could start using Bitcoin. And Americans have a pride in their own freedom, using whatever technology and form of money that they see fit, and any method of communication also that they see fit. Bitcoin is a method of communication. So just because a bill makes its way onto the floor doesn't mean it's going to pass. I'm confident that Americans will respond in the appropriate way to protect what they need to in terms of their own privacy and rights to communicate, whether it's through mathematical code or just through messages. And that politicians, listen, I have it on a decent source that Senator Warren is on the take from the Ripple lobby. So you could just make of that what you want, but I think this is a serious issue and it will be taken seriously by Americans. Just because we get a bill introduced doesn't really mean anything to me. I know that there are people that need to get out and do the fight in terms of identifying the negatives in the legislation. I see somebody saying, "I'll be calling my congressman." That's what's going to happen. And we all have our role. So I'll be out there writing, and then people will be reading, they'll be calling, and we'll all work together to protect the American right to communicate in the way that we want, which we have, and it's an alienable right. You can't put a lien against my right to speak in the way that I want to, and Bitcoin is part of that. So I'm just going to beat the drum on freedom of speech, American flag, and we'll look to see how the country responds. I don't have any such optimism across the pond. So if you go to Europe and spend any time there, your optimism will get crushed. The optimism that we'll all have freedom of speech will get sucked out of you. And so I think that there's a big difference between the way that American legislators and European legislators will take.
So do you think that's a cultural thing? Because it's funny, because I noticed that as well, Nick, right? Which is and you see this with how how aggressive the European regulators have been, and how much more successful they've been with introducing this type of intervention in people's lives. Like the idea that because of some keys that you're typing in a computer, they could put you in a concrete box and lock the key is just absolutely absurd to me. It's absolutely disgusting. And I do agree with you. Inherently, it is super anti-American. And technically, you are protected to say whatever no, it can't be violence, it can't be any of that thing, but you are protected to speak your mind. Like that's literally, it's enshrined. They put it as the First Amendment for a reason, right? But why do you think some individuals in the state are going to these lengths to try to at least slow down the adoption of Bitcoin?
Well, if you've ever if you've read any bureaucratic fantasy, like 1984, for example, and we know that royals and politicians gift each other 1984 and Brave New World and other types of these dystopian bureaucratic fantasies to each other because they love the idea of control, all out control from the bureaucracy side. So to expect that they're going to do that, you have to know your history as well in terms of what governments like to do. So the government will play its role, and that role will be restrict freedoms.
Yeah.
I think that we've seen that. And it comes from both sides of the aisle here in the US. And it comes from, you know, unilateral party control in other places and through time and through history as well. So if that's what they want, total control, then we'll see bills that lead to, you know, restrictions on privacy, control of the flow of money, and all that. Um, and the US government has done a really good job of restricting money flow and restricting privacy with the legislation. So it's not all optimism there because of what the government wants to do. But I believe Bitcoin will survive its attacks because of the fact that you can't really subpoena it or shut it down, and so it'll continue to live on. Um, and then one thing I should also mention is that you have now publicly traded companies in the United States in the Bitcoin business, and you also have the CME, the Chicago Mercantile Exchange, Fidelity, and Bank of New York Mellon, for example, all getting involved in Bitcoin technology itself. Um, in the case of Fidelity and Bank of New York Mellon, it's been for more than half a decade. And so they'll send people to DC and they'll hire lobbyists too. So there will be people involved on both sides, and it will be a battle for sure.
So let's talk a little bit about the source of their power, right? So the source of power is they have a monopoly on violence. Most importantly, it's the deficit spending, right? It's the money printing, right? A lot of Bitcoiners make the argument that Bitcoin will eventually lead to the death of the dollar. But what we were talking about earlier on in the episode, right, is that you could make the argument that the dollar has actually shown strength, right? What are your thoughts on that?
Yeah, I think the death of the dollar is it's one of my least favorite narratives out there, because if you look at the dollar relative to every other fiat currency, it is the best and it's doing very well over the last several years, and especially this year. So the dollar is actually, if you look at the statistics, ranges from 50 to 80% of the denomination of global trade. And it depends on how you strike each trade that goes on around the world. But the statistics are that at least half of all global transactions are dollar denominated. And if you're on the ground in countries around the world, dollars are still treated like literal gold. And the scarcity of paper dollars around the world is something that leads to the demand for those dollars as a storage vehicle for those people in those countries. So the death of the dollar is it's a it's a very dramatic way to describe the current monetary system. The death of other fiat currencies versus the dollar is something that's a more legitimate conversation or debate to have. And the death of the dollar versus real assets over a long term time horizon is uh, something that can be fleshed out as well. Because I think that that's a lot of what Bitcoiners identify is that, okay, the dollar is going to lose all of its value versus real assets over a long-term time horizon. So I want to own stocks, I want to own real estate, gold, or I want to own Bitcoin. But the death of the dollar itself, in terms of the dollar going away and losing out to maybe other currencies like the euro or the Chinese renminbi, it's fantastical to me. It's so far divorced from the reality of how the monetary system works. And the network effect of the dollar is so strong that to displace it, it I mean, it's almost impossible to think that that could happen over any short order, 10 to 20 years. Um, Especially because the Chinese have a closed currency. Everyone's like, oh, China is the Belt and Road Initiative and they're spreading the renminbi all over the world. They're doing it and they're having some success, but it doesn't mean the renminbi is going to come and challenge the dollar on a global scale. And Europe can't figure out their political alignment with each other. They still can't figure it out. They're still bickering with each other. Every little financial crisis leads to, oh, the EU is going to break up. Oh no, we're coming together. Okay, Germany's going to bail us out. Where's the German bailout? It's a mess in Europe. And what other currency is there besides the euro and the renminbi that have any really global take? So the death of the dollar is, again, semantics, but it's total nonsense if you're comparing it to other fiat currencies. And it has merit against, if you look at a long-term chart on the stock market since 2009 or real estate prices since 2009, but look at the way that the dollar has charged back versus those asset classes in the last 6 to 12 months. It's coming back. And the Fed likes that. The Fed likes lower real estate prices and lower stock prices and a higher dollar to try to choke off growth and slow down inflation. And the Fed is making it clear that they'll do their best to keep rates high and basically keep the dollar relatively strong as much as they possibly can before inflation can come down. So that's my take on the death of the dollar. Again, it doesn't mean that I'm here covering Bitcoin from the long position because I feel that the current financial system leads to situations that will lead to large swaths of global liquidity coming into the market. I can't time that, but I can position myself for it. And when I'm thinking about the long-term growth of Bitcoin, I'm thinking about the global liquidity that will assuredly come our way in waves from the US and every other country over the coming financial crises. But that doesn't mean that the dollar is going to die. I think that's a mischaracterization.
And okay, that's the first narrative, right? And I wanted to ask you about that. The second narrative is, which I heard so much last year, is this narrative of the dollar inevitably is going to hyperinflate. What are your thoughts on that?
It was part of my original thesis, when QE started in 2010. But then I witnessed the empirical evidence, which is that the opposite happens. A QE is actually leading to structurally lower inflation. And that's a conversation for another day, but rates went down during QE and they went up when the Fed stopped QE. And right now, the Fed is not doing QE, they're doing QT, meaning the opposite of money printing. They're doing money destruction, and rates are going up and inflation is happening. So it really is, the hyperinflation of the dollar is not something that I believe in. It's not in my base case scenario. It's always a possibility, but when you look at structural inflation in dollar terms, it's just not there. And there are a lot of factors to that. Globalization, technology, and demographics are some of the main ones. But we live in this dollar regime of structurally low inflation, and that the pandemic-induced supply chain break inflation of the last couple years is going to eventually fade and give way back to some of the overarching disinflationary trends, including demographics, technology, and the overall debt stack as well.
Is the dollar the final boss? Like, is that the final thing that needs to go? Because I agree with you. I think in developing countries, like, you have physical dollars. It really is true. Like, oh, like those images never escape my mind. it's almost as if it's an educational type of generational thing, right? And of course, as Bitcoiners, we know Bitcoiners better money, has a cap supply, censorship resistant, all that good stuff. But is this an educational issue? Is this a cultural issue where people have these physical dollars and they see, Benjamin Franklin, the $100 bill, and it's almost as if they're treating it like that. But we all know, if you look behind the hood, that isn't the case. So is it a psychological thing? Is it a cultural thing? Is it an educational thing? What's your perspective on that?
It network effects take a long time to die. I if you think about technologies that have been adopted over the last few decades, even the ones that have lost on network effect are still being used by people. So the dollar, to try to forecast the end of the dollar, I think stretches beyond what we are capable of trying to project. The US position versus the rest of the world today, to project that the US will fall from the world superpower to China or to XYZ country, and I'm talking about a global influence, not GDP or all that, but truly where is the world looking to for leadership and all that. To say that it's not going to be the US in, let's just say, 10 years, that sounds like a ridiculous projection. And so I think if you just take the US out and put the dollar in, then that claim still holds. Like, I would still say it's ridiculous to think that the US won't be in the same global superpower position in 10 years. And the dollar, kind of the same story there. There's just too strong of a network effect for it to just go away from people's mind. Is it the Benjamin that you see in your hand? Is it that, I mean, I don't know what it is, psychological or not, but that network effect has been there since long before I was born. And these network effects move, incredibly slowly. Look at Bitcoin. We identify Bitcoin as something. When was hyper Bitcoinization written? 2013, I believe, 12 or 13 or 14. So almost 10 years ago that piece was written. But how slow does it happen? It just takes time.
Yeah, I agree with you. Definitely takes time, and it's also a educational thing. It's a cultural thing. And this is what I heard from Matt Hill, the CEO of Start9. He said it's also a multi-generational thing as well. And I'm starting to believe that. Nik, I really enjoyed this. Thank you so much for joining me today. Why don't you tell everybody where they can find what you're working on these days?
Thebitcoinlayer.com, you guys will find all the links. Sign up for our newsletter, sign up for or subscribe to our YouTube channel, subscribe to our podcast, which is the YouTube content in audio form on your favorite podcast platform, and just follow along. We're doing research and analysis covering Bitcoin through a global macro lens. We've been doing it for over a year, and we're excited for the next phase.
Thanks, Nik. I really appreciate it. I'm going to put you backstage for a second. There's a slight delay, so bear with me. Guys, I will see you tomorrow back at the live show, 12:15 p.m. Eastern Standard Time. Love you all. See you later.